I'm Dan Fitzpatrick at Stock Market Mentor, and this is going to be a pretty short video because there's not much to talk about really today with respect to actually wanting to make money. But I'll show you how to not lose money on a day like today. First of all, and you're looking at SMCI here, you can see what happened. This stock is down now more than 60% from the high. That is a nasty move in just a few months, less than 6 months. 5 months this is down, and it's definitely, you're going to see a bunch of lines come up here real quick because I have all kinds of annotations here. Yeah, you're going to see a lot of, I got to take that off, but it made this kind of move, this kind of triangle pattern. I gotta do this another way. Here, my apologies. This is what I'm talking about. Okay, it was down here, it came up here. You're seeing higher lows, basically a flat top with a little bit of a downtrend here. And so the hope on something like this is that it breaks out of this volatility squeeze. But when it breaks down below the volatility squeeze, and this was a squeeze, this was pretty tight stuff. And by the way, these are 3 standard deviation Bollinger Bands. I use them in volatile times because I want to know what the heck's going on. But you can see, like, if we do the standard two standard deviations, this is much tighter. So once this breaks out the bottom side, especially when the market is really imploding like this, when it does that, you should not be buying this stock at all, not anywhere down here. I show people in our strategy session tonight exactly what I did to lose money on Super Micro. I actually made 2 trades on it this morning, both of them losers, neither one of them significant at all. In this volatile market, I will start any position really light, and only if it starts rewarding me will I want to really increase my exposure. But neither one of them really worked out, and I'm not gonna, there's no reason for me to show you that. I'd just tell you I made a couple trades and I lost money. But all the way down here, you shouldn't be buying this stock at all. And like at the 50-day moving average, oh, well, it's going to hold the 50. All right, guys, we don't know that. We see it there. Okay, it almost, great. It held there. It didn't really test it, but sure, it held there. Then it comes back down. Oh, and then what's going to happen? Oh, it's still holding here. I got to buy this at the 50-day moving average. Here we go. Look at this. I got to buy it now. Okay, well, that didn't work out too well, did it? One of the reasons is that when you are looking to buy a stock at support, you want to see 3 sides to a base. Sometimes it'll just be a big V, but typically not. You want to see a left side, and hopefully it's more kind of gradual, but you want to see a left side, and that's just the weak hand selling. Then you want to see some kind of bottom of a base, which shows you that buyers are right here and they're soaking up all the supply. And then once the stock, and if the stock starts to run higher, this tells you that the supply that was here, there's no more supply. So the buyers have to start buying if they want to continue to buy the stock. And if the stock continues to run higher, the only reason it does that is because people wanted to buy the stock. So that's the logic behind having 3 sides to a base: a definitive left downtrend, a definitive bottom, and then a definitive start on the uptrend. And that's when it's really safe to be buying SMCI or a stock like this. And the reason is because you can have a tight stop right down here. And you say, well, the whole reason I'm buying this is because I see the downdraft, I see the base, I see the move higher. Well, I don't want to be in this stock if this turns out not to be the base. And so you're able to manage your risk that way. But if you're just buying a stock because you think it's come down enough, that's not why you want to be buying this stock. So my suspicion is, we'll see how this plays out. My suspicion is we'll get some kind of a rebound tomorrow. I still wouldn't buy the stock. I mean, this stock is so far away from being bought. It should even just be off your radar. Like, just don't even be looking at it. They're splitting. I think they said a 10 for 1, and that's fine. But it didn't impact the stock price at all. Nobody's buying stocks because they're splitting anymore. We see the same thing with Broadcom. They split 10 for 1 here, and all that did was create more shares to sell. And so with SMCI, you can get all lathered up about it because, hey, they're making stuff for AI and all that, and they're a key player with NVIDIA. But I don't care about that. I care about this stock being in an uptrend. And so until we start seeing, look, we're still looking for a base. We're actually just looking for a bottom. If we can find a bottom someplace and then see the stock kind of start to move sideways, then we can start looking at buying SMCI. But the date is August 7th, 2024. This stock will not be a good buy for probably months. I'm just telling you. Until then, it's goodbye. Just be patient on something like this. The market knows way more than we do. A stock's down 60% should tell us something, right? So when you see something like this, just kind of relax and go, you know what? I'll let somebody else step out and buy at the bottom. I want to wait for my pattern. I want to wait for stocks, for some stock that shows me that it's actually good to buy now because it's moving higher, as opposed to it's actually good to buy now because it's done moving lower. In the first part, where it's moving higher, you make money. On the second one, oh, it's done moving lower. Well, you lose time. Maybe you're buying at the bottom, but you're not making money. So anyway, that's all I got for you today. Check out Stock Market Mentor. We got a lot of people coming in, which is really cool to see, especially in this nasty market. So come on in and let me help you with your trading, okay? You guys have a great evening, and I'll see you mañana.